Morning, guys. Happy Friday. It's August 15th, 5:30 a.m. Central Time. Grain markets are mixed to higher this morning. Matt Bennett is here. Matt, good morning.
What's up, Joe?
Why don't you give me a quick crop update from Central Illinois? Is the corn going to be 400 bushels on your farm?
Nope, it's not. In all honesty, it looked fantastic. I go back to our 4-H fair week was like the third week of July, and I would have said we were going to probably have the best crop we've ever seen. Really haven't had any rain since then. And so, I can go without rain. I get it. We've built a good corn crop. Don't get me wrong. It's just we didn't get a good finishing crop, and then we had 90s for several days, and we had a lot of over 70-degree nights this summer. And guys are getting out in their field and saying it looks phenomenal from the road, but there's a lot of tip back going on. First of all, a lot of disease pressure, even with people that sprayed fungicide. I'm gonna have good corn, but I'm not gonna have record corn though. I feel very confident in saying that. I hate it because I mean, gosh, it's about the only way to get there right now is to outproduce the thing. So it's gone downhill big time in parts of Illinois.
All right. Mackenzie is off today, so I'm going to read the news as I used to do many years ago.
There you go.
USDA may need to talk with actual farmers. The agency issued a rather tone-deaf post on X yesterday indicating that this is the summer of making agriculture great again. USDA said it's been 6 months into this season, and Secretary Rollins is fighting every day to put farmers first. Recent farm payments, including ECAP and supplemental disaster relief, were approved prior to Trump's inauguration. They don't have anything to do with the Rollins USDA. The current and previous administrations did very little to improve the biofuel space with regard to corn ethanol, although pending RVO updates could be a big positive for domestic soybean demand. A trade dispute with China has arguably caused reduced demand for soybeans. U.S. row crop farmers are in dire straits amid sky-high production costs and low commodity prices. Matthew, I'm not really sure what USDA should be doing to help farmers. I don't know if they should be doing anything, but the fact that they're like parading around saying we're making ag great again this summer is misleading and disconnected.
It doesn't feel great for most people. I mean, I've been out speaking quite a bit here these last 2 weeks, and I will tell you that the mood is definitely somber. There's no question. I mean, why wouldn't it be? I mean, yeah, and then you get on social media and you see all these experts saying, well, the farmer should have been selling whenever it was 470, and guys feel beat up because they never really had a chance this year, to get into what you would call a profitable situation. And so it's a rough go. What should the USDA be doing? Clearly, we need a trade deal with China. I don't know that the USDA is going to be capable, but they should be pushing hard for something for the.
Well, people are gonna put Rollins in the same basket as Trump and saying that this is the administration that you elected, and say these are the same people.
Yeah, I mean, this needs to happen. There's no question about it. And so clearly, we're losing our dominance in the world export market. I mean, beans. I mean, good Lord, South America's tripling us. And you look at corn, I mean, they're exporting more corn than what we are. They're not, it's not wildly above, but when you're in that situation from a usage standpoint, I mean, clearly you need to be thinking about what are you going to do domestically, to continue to keep demand strong. And so I don't know, in all honesty, I think that them coming out and saying this right now, the way that this feels is salt in the wound for a lot of growers. And I think that they're frustrated.
Now, to be clear, Donald Trump and Brooke Rollins are not responsible for 97 million corn acres.
Agreed.
They're not responsible for just fantastic rainfall totals during the month of July.
Yep.
Some people would argue, oh, NASS screwed up the crop estimates, and that's why the market's down. The acreage number is real. That's farmer reported FSA stuff. The yield number is a guess. Everybody knows that. I mean, we haven't gotten into the fields yet.
Well, I mean, what's the yield number? The yield number is the NDVI, first of all, or thermal imaging, call it what you want. And also it's what the grower told USDA they had.
Yeah.
I mean, and so, growers feel great about their crop, and they should. I mean, it looks really good, but I would say, that the Pro Farmer Tour next week will be as interesting as any I remember for a while, just due to the fact that a lot of these guys have told me over the last several days that they reported like a 220, 240, 250, depending on where they were at, whole farm average. Then they got out in the middle of their field and they've done an about face. And so I do think there could be some adjustments here. But gosh, I was in Iowa yesterday, and I had guys telling me they think they could be pulling some farm, field averages, well over 300. They just, but they've had rain all year long. So I don't know. If there was a place that was going to happen, that would be where it would be.
All right, let's go to the actual market. The December 25 corn contract held its report day low on Thursday. The contract traded lower early in the session and bottomed within a couple ticks of the early week low. Late session buying emerged, and the contract was ultimately able to finish the day unchanged. Another week of strong new crop export sales helped to boost prices, although a hugely bearish supply and demand estimate from USDA continues to weigh on sentiment. The November 25 soybean contract filled its July chart gap on Thursday prior to reverting lower. Should we feel good or encouraged about this action in the corn market just the last 24 hours or so?
The last 24 hours, not necessarily, but in all honesty, yesterday, whenever you go down double digits on beans for most of the day and corn's able to claw back close to unchanged, I thought that was decent. I mean,
Yep.
the other thing I thought was decent was I saw 188 plus the 2 million acre increase or 1.9 in harvested acres. I kind of thought, Joe, we might be looking at our first limit move in a while. I
Hell
mean,
yeah. That's what I thought when I saw it.
absolutely. And so, to be honest, the corn market this week, all things considered, and you got to quantify it there. It probably has performed better than what I thought it would. But the bean deal is a little concerning for me. Yesterday you saw basis certainly taking it on the chin. I mean, they talk SIF market. Bottom line is export situation is not good right now, and you don't have a lot of demand on the river. And I think that it's a little problematic, really. In all honesty, I do think it's a more bullish situation by all means. You can't take yield down much unless you really adjust demand. I mean, but you could adjust demand pretty clearly if you don't start exporting.
Talk to me about farmer owned bushels, whether old crop and new crop combined, that
Yeah,
are going to need to be sold here in the next, call it 2.5 months.
yeah.
We understand that the farmer is undersold, generally speaking. I've heard estimates. U.S. corn growers only got 10% or less of his
Mhm.
crops priced for new crop delivery. How much is going to have to be sold into this market in the next 3 months? And what does that mean for price potential?
Yeah, I mean, clearly there's going to have to be quite a bit. I think there would be even more than what a lot of years there would have to be, just simply due to cash needs. I mean, there's no doubt liquidity has been challenged in the last 3 years, and
Yeah.
so problem is, Joe, let's say you get a rally due to a trade deal or something you and I aren't expecting. And I know people listen to this, say, oh, there's no way we can get a rally. Hey, in
Oh, we
2020,
can.
you had a derecho, you had Chinese buying, you had things come in here with a market that seemed like it would never rally. I believe in early August of 20, ADM Decatur, which is our big hub in this part of the world, was bidding like 315 for corn heading into harvest. It's like that's not good, right? And so let's say you get some sort of rally in here. I feel very confident, Joe, that in most of these areas that I would say is the breadbasket of the Corn Belt, your basis is going to widen just as much as what your rally is going to give you.
Yeah.
So you really need to quantify some of those bushels that have to go to town. I feel pretty strongly about that. If you want to have some length or stay in the market somewhere, I'm all for it. Commercial storage bothers me just a little bit. It's certainly super expensive. I was in that game for a long time, and so I understand why those guys are charging for storage what they do. But at the same time, as a grower, I don't know that we can afford to pay it. If the market would stay flat and you're paying 40 cents a bushel to get out to spring, that's not going to be fun. And so I'm selling the bushels and then keeping some ownership through a call or a call spread. I hate buying calls in a carry market, but I
Yeah.
think in this particular situation, you could swing the pendulum just a little bit because I think the grower's appetite for plant corn, I just don't think it's going to be there next year.
No, we'll see a reduction in corn acreage in 26 unless
For
something
sure.
really changes.
Absolutely.
Next story. China is booking Brazilian soybeans for delivery during the United States normal export window for September and October shipments. Chinese importers have booked over 12 million tons from South America, leaving little room for U.S. sales. Trade tensions and a 23% tariff on U.S. soybeans make them less competitive, even though they are about $40 per ton cheaper without the tariff. This could cause U.S. exporters to miss out on billions of dollars in sales and keep prices near 5-year lows. Analysts say the U.S. might sell small amounts late in the season if Brazil runs short. Last year, China bought over 22 million tons of U.S. soybeans from the United States, but purchases have dropped sharply since the trade war begun. A deal to cut tariffs later this year could help U.S. exports recover and compete with Brazil again. I'm not sure how accurate those numbers are in terms of the competitiveness, but we have sold zero new crop soybeans to China out of the United States. And if Brazil is really selling beans to China for like October delivery, that's kind of it's impeding on our window.
That's our breadbasket.
Yep,
You know,
sure is.
I mean, it's almost getting to the point where they're going to be a 12-month supplier. I mean, usually we wait around for February, and that's when ours start to tail off towards the end of
Mhm.
February, and Brazil really starts to pick up. By most estimations, Brazil's got enough soybeans to sell them out through October, November timeframe, and then they'll start to run out somewhat. But I don't know, Joe. I mean, it's concerning. What you need to see, yeah, I don't know if we're going to get it. I mean, we're going to get a trade deal of some sort, but what you need to see is a trade deal with quotas where China comes in here and says, hey, if we want to do business with NVIDIA, like some of the rumors are, then to do that, we're going to have to see, I don't know, maybe take a 5-year average of soybean purchases from the US and we're going
Yeah.
to try to stay within 80% of that or something. I don't know what it is, but that's what I'd like to see, some sort of quota to where we know they're going to be a business partner and we're not sitting here on eggshells all the time.
So the last I read, I think Scott Besson said they were going to meet with China again in a few months. I think that was the quote. Like
Great.
that's too far into the future. One thing that should be noted is that this reduction in the window for U.S. soybean exports to China, like the window keeps shrinking. That predates Donald Trump or trade wars.
Yeah,
Brazil continues to produce more, and therefore the U.S. export window to China is becoming reduced on like an annual basis. It's getting smaller and
for
smaller and
sure.
smaller, and it could get bigger again if Brazil ever had a big crop problem, but that doesn't appear to be in the cards right now. Although got a whole nother growing season coming up.
Yeah, the problem is with them having a growing season problem is that they're adding 2 to 3% every single year on planted
Yeah,
acres. And
yeah.
so that gives them the ability to have weather issues in parts of their provinces and still raise a mammoth crop. And so, I mean, they're out producing us big time at this stage. We got to understand that.
All right, let's move on. New crop U.S. Corn export sales were once again exceptional last week. Weekly net new crop sales of 81 million bushels were historically high, despite China not being a major buyer. They were also 156% above the same week last year. Mexico was the largest corn buyer for the week. Net new crop soybean sales exceeded pre-report expectations at 42 million bushels. Unknown destinations, the largest buyer for the week. China still hasn't bought any new crop U.S. soybeans. Net wheat sales were strong at 27 million bushels. That was down a couple percentage points on the week. Let's look at the charts here. So old crop U.S. corn export sales, best book on record. Fantastic, right? This has already
Absolutely.
been discounted into the marketplace. We've already known this for a long time.
Yeah, it is absolutely incredible. And then, the only thing that's problematic for me, Joe, I'm pretty excited about corn demand, but at the same time, you take demand at 545 million bushels. Whenever Brazil's got a lot of corn to export, quite frankly, and it's pretty tough to convince me that we're definitely going to export more than what we did last year. I mean, last year, Brazil, Ukraine, and Argentina had the lowest exportable corn they'd had in, I believe, 15 years. And so I don't know. Hopefully, we can kind of keep this train rolling. I mean, this is the biggest book we've seen going into new crop sales. I believe pretty much second biggest ever. I knew
Yep.
the only other time was whenever China was in buying corn, but
The new crop book is more than double last year. It's 108%
huge.
above the same week last year.
Yeah, absolutely. And so that's great news. If we can keep this demand train rolling, it's going to be at some point you're going to start talking about what 26 is going to look like because demand's so strong. And so yeah, I mean beans is just a train wreck, but for corn it's a good situation.
Yeah. Okay. We had another flash sale of corn yesterday. Here's an interesting piece. So you mentioned Brazil and how they've got this monster crop. USDA, did they adjust Brazil at all earlier this week? Maybe
I
they
don't
raised it a
believe so.
million.
I don't believe so.
They're
If
at
they did, it
130.
was marginally.
They're at 131 or 132. That crop's every bit of 140. It might be 145. Yet Brazilian corn is drastically more expensive than U.S. corn on the export market. You're
Yeah.
talking 40, 50, 60 cents per bushel. What I've been told is that the Brazilian farmer they didn't necessarily make money growing soybeans, but they've got cash from the soybean crop, and that's able to help them cash flow. And they're kind of holding and hoping their corn crop, waiting on better prices. They're in the same spot as the U.S. farmer. They're losing their assets this year.
Yeah, hope strategy doesn't work very well
No.
sometimes, but I do think that if the Brazilian farmer is patient, I think a couple of different things come to mind. First of all, I mean, what they raised like 14 bushel per acre, better than anything they'd ever seen. I
I
mean,
believe so.
just an incredible crop for them, and that's not something they can count on every year. First of all, second of all, with fertilizer prices where they're at here in the U.S., I talked to a lot of growers in the last 2 weeks that have told me I'm not fertilizing like I did before. First of all, second of all, I'm going to go corn to beans, beans to corn. And third of all, you know what? I may have to plant a few more soybeans than what I want to,
Mhm.
just due to economics. And so, let's say Joe, you come in here with a 2.1 carry. and you want to go ahead and carry this into a new crop spreadsheet. And we've looked at what a balance sheet might look like with 91 million, even 92 million acres. And that what do you have to do? You have to raise a mammoth crop again next year. And so at some point, if the bean market doesn't fall out of bed, that's going to be a viable option, and then they're going to have to buy a few corn acres, believe it or not. But we got to have beans at least keep from again imploding.
Okay, let's look at soybean export sales. Here's old crop. You're toward the lower end of what you've seen over the last 10 years. Here's new crop, second worst of the last 10 years. We actually had a decent week last week, despite the fact that China's absent. But this is your big problem with regard to beans, is that China's absent and the total book of export sales, which is largely driven by China, is very low. Hey, wheat sales are the best of the last 10 years. And the wheat market, like every damn day of the week, posts fresh lows. Like every day in my email, I've got to write fresh life of contract lows posted today.
No.
I mean, is the market ever going to notice this or care, or are we just oversupplied?
We're oversupplied. I mean, you got 100 million bushels more wheat available in the U.S. alone. I mean, clearly we're not the hallmark here as far as world wheat situation goes. But you got enough wheat in the world. You got enough wheat in the U.S. Bottom line right now, I don't know what it is it's going to take to really get the wheat market fired up. You're going to have a global weather situation somewhere in one of your major producing areas, whether it's Australia or better yet, Russia. I say that not because I'm trying to be a jerk. It's just that they produce and export the most wheat in the world. And so, if you would have an issue there, by all means, it's going to give the wheat market something to trade. But right now, it just seems like it's just DOA. I mean, it's just had no life whatsoever.
All right, let's talk about drought or lack thereof. USDA released weekly drought monitor data on Thursday. Rainfall across the Corn Belt varied last week. Heaviest amounts fell in areas unaffected by drought, limiting overall improvement. Minnesota saw slight improvements. Drought conditions in the southern areas of Missouri, Illinois, and Kentucky worsened due to a lack of rainfall. Ohio and north central Indiana also experienced worsening dryness. Scattered rainfall across the high plains brought some relief to dry areas in North Dakota and Nebraska. Drought conditions surfaced in Oklahoma. U.S. areas experiencing drought. Corn is only 4%, soybeans at 3%, just historically very low.
Yeah.
Here's some good stuff from our friends at Crop Profit. You can see the dry areas are still dry. This is rainfall based on the degree of drought over the last week. Like they're not catching the rains that they need, at least over the last week. And then this is more the bigger picture stuff. Like you've got almost no U.S. corn and soybean areas that are experiencing like exceptional drought. You've got some moderately dry type stuff. Let's talk about weather a little bit. This is the rainfall rankings from June 1st through yesterday, Matt. And we've had a historically very wet summer in the Western Corn Belt in particular. About 2/3 of Iowa into parts of Nebraska, parts of Minnesota, parts of South Dakota. Is that really the best thing in the world for yield potential?
Yeah, I think for corn, a lot of those guys feel like they've pretty much gotten there. One thing that concerns you, of course, when you get that much rainfall is what disease pressure is. So several growers have shared with me in the last couple of days that they applied fungicide, and then they've had like southern rust especially kind of pop back up. And so some growers are trying to decide, hey, do I want to spend another $30 to $40 an acre on a second fungicide pass, which is a kind of a tough sell whenever D's corn's under $4. I get it. That's a tough decision, but too much rain is problematic in ways. It's hard to rally market on too much rain. I think where it really gets interesting is for soybeans. I mean, in the areas there to the west, what you've got is a lot of sudden death showing up. You've got a lot of white mold showing up because it's just too moist. And then you get into the eastern corn belt, and while we're not seeing drought show up in a major way, the problem is that we kind of getting into a flash drought situation where for the last 3 weeks we can't catch a rain at the most important time for soybeans. And so, relatively speaking, the eastern corn belt plants a bigger percentage, of soybeans than they do corn, whereas in the west you've got a bigger percentage of beans than you do corn, or corn than you do beans. I don't know, Joe. I think that the eastern corn belt, your yields could fall off. And I just want to use my own personal example. Right where I'm at, I mean, we've got beans that look phenomenal. If they were planted in April, if we had a soaking rain, we could have 85, 90 bushel beans across the board. If we don't, I think you take 20 bushel off that, just because we're 3 weeks without rain at this point. And if you finish that dry, I mean, you're not going to have anything to fill pods, and they'll be good beans, relatively speaking, but they're not going to be good enough beans to even pay the bills. So the eastern corn belt needs to get a rain here for too long. You're going to have to dial back that national yield, in my opinion, maybe a couple, 3 bushel.
John Deere says that tariffs could cost the company $600 million this year. Deere reported strong earnings for the third quarter, beating Wall Street expectations. However, the company said tariffs costed about $200 million during the quarter. So far this year, tariff expenses have reached about $300 million, and the total could be $600 million for the calendar year. Sales and net income both dropped compared to last year, even though profits were still better than analysts expected. The company lowered the high end of its full year profit forecast. Executives said they are seeing signs of growing demand in Europe and South America. They believe future trade deals and tax policies could help offset some of the current challenges. These are their challenges, Matt. 50% tariffs on steel and aluminum imports, which are things that they need to build what they build. They do manufacture some stuff in Germany. There's a tariff on that. And then you've got some retaliatory tariffs. Maybe some issues with the U.S. farm economy, of course, has impacted Deere. But look at this. I mean, they've outperformed the broader stock market. The Deere stock's up 13% year to date. The S&P is only up 10. They're up 27% over the last year. The S&P is only up 17. John Deere is a profit machine the way it looks.
I guess. I mean, my thought when you first started was to say, I don't think the U.S. grower is going to pass a hat trying to help John Deere. I'm not trying to talk bad about him. I just say this, though. I think their biggest concern moving forward is that, the price points they've gotten to on quad tracks and X9s and things like that, the big ticket items necessitate very few of those machines are going to get sold this year.
Yeah.
I mean, the used equipment market is certainly softened. And why wouldn't it? And so the problem there is, a lot of growers many years are going to buy, equipment. And yes, you've got accelerated depreciation available again, but you've got to have freaking some income to start with, I mean, that's the problem. So I do think it's going to be a big issue for all equipment manufacturers. And, but the incredible thing is that Deere's still posting the kind of earnings and profits that they are. I mean, it's quite impressive, really.
Mackenzie isn't here to do cattle today, but live cattle and feeder cattle got beat up pretty good yesterday. Any thoughts there?
I still think there's just some angst. In my opinion, you've got some of these funds you've got to think that they're asking themselves, at what point do we lose interest here? Even though fundamentally it looks phenomenal, we've made a ton of money here. So I'm still very cautious with the cattle market. Days like yesterday, I think you could see those happen in the course of a week. I think you could take like $40-$50 out of the fat cattle market pretty rapidly. I know people don't want to hear that. It's just that's what's going to happen with the funds when they've been that long for that long. I don't know. I'd be a little bit cautious.
Matt, thanks for joining me. Guys, have a wonderful weekend. We'll be back on Monday.